This is an Uncovered Japan company research report on Enplas Corporation, ticker 6961. Enplas is a Japanese precision plastics specialist whose test sockets, optical components, and other engineered parts sit in demanding applications, including the AI chip supply chain. The central question is simple: how much of that AI opportunity is durable, and how much is already reflected in the share price? The snapshot combines growth and resilience. In the year to March 2026, Enplas generated 42.5 billion yen in revenue. Its semiconductor segment rose 46% year-on-year as AI chip test socket demand accelerated. The company also carried an 87.8% equity ratio and about 22.5 billion yen of net cash. That combination gives it room to invest through a cycle, but it does not remove the cycle itself. Enplas turns engineering plastics into functional components measured in microns. Its products include the test and burn-in sockets that hold chips during testing, lab-on-a-chip devices, molded optics for communications equipment, and precision gears. The company describes its advantage as material, process, and evaluation, proprietary material know-how, repeatable molding, and the ability to validate parts with customers. That is materially different from a low-value commodity molding operation. The 5-year financial record is positive, but not smooth. Revenue rose from 32.9 billion yen in fiscal 2022 to 42.5 billion in fiscal 2026, a 6.6% compound annual rate. Operating profit grew faster, at 14.4%. Yet the decline after the fiscal 2023 peak and the subsequent recovery are a reminder that Enplas is exposed to semiconductor demand swings. This is a quality cyclical, not a steady compounder. The segment mix explains both the opportunity and the risk. Semiconductor represented 55.5% of fiscal 2026 sales and grew 46.4% as AI-related socket demand strengthened. Energy-saving solution, largely automotive gears, provided about a third of sales and a more stable counterweight. At the other extreme, digital communication fell 66.2% and recorded an operating loss. Enplas is diversified enough not to be a one-product company, but results are still driven by a few high-variance niches. Cash generation reinforces the balance sheet picture, with an important qualification. Operating cash flow remained healthy across the 5 years shown, but free cash flow fell to near zero in fiscal 2026 as capital expenditure ramped. That is not automatically negative. The company is funding capacity and growth initiatives. It does mean that investors should monitor whether those investments translate into durable returns, rather than assuming the cash balance alone guarantees future value creation. The moat is strongest where changing suppliers is hard. Enplas designs its molds in-house, produces high-tolerance components, and works with customers on evaluation and qualification. That can create meaningful switching costs in test sockets and optical parts. The trade-off is concentration. The AI demand story depends on a limited number of GPU, hyperscaler ASIC, tester, and foundry programs. Strong customer quality does not eliminate the risk that a delayed program can move earnings quickly. The strategic roadmap calls for 55 billion yen of revenue and return on equity above 10% by fiscal 2029. Fiscal 2027 guidance points to 48 billion yen of revenue, so the plan is not a distant aspiration. Management has revised targets upward as the AI opportunity improved. Still, the path depends on sustained semiconductor test socket demand and on execution in areas such as next-generation optical communications. Those are measurable milestones, not assumptions to take on faith. This chart shows the core capital allocation tension. The equity ratio stayed close to 88%, giving Enplas an unusually resilient financial base. At the same time, return on equity improved from 7% in fiscal 2024 to 8.9% in fiscal 2026, still short of the company's 10% plus target. For shareholders, the right question is whether the cash-rich balance sheet becomes a competitive advantage through investment and returns, or simply depresses capital efficiency. Valuation is where a good business becomes a more demanding investment case. The report puts forward price to earnings at 23.2 times, versus a 5-year average of 13.4 times. The current multiple is high relative to Enplas's own volatile history and reflects optimism around AI. That does not make the shares automatically expensive, but it narrows the margin for disappointment if semiconductor demand softens or new programs ramp more slowly than expected. The author's scenario analysis makes the risk explicit rather than hiding it behind a single target price. The fiscal 2029 fair value range runs from 3,930 yen in the bear case to 18,607 yen in the bull case, with a 9,712 yen base case. That range captures the central uncertainty. Enplas has high-quality capabilities and clear AI exposure, but the cycle, margins, and valuation can all move sharply. This is a thesis where monitoring the indicators matters as much as the starting story. To sum up, Enplas is a niche top precision components business with a credible moat, a fortress balance sheet, and valuable exposure to AI infrastructure. The counterweight is that its earnings are cyclical, some segments are under pressure, and a 23 times forward multiple already assumes continued delivery. The practical scorecard is clear. Follow AI chip demand, customer programs, capital returns, digital communication recovery, and progress toward the company's return on equity target. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.